Look at the literature around costs. Most of it is about our costs in making services available. It's not about clients' costs and accessing services. I'm talking about both. This is all the cool stuff that happens when you get costs down. If you can drive costs down, so many good things fall in place. You can lower interest rates if that's your desire. You get better profits. Improve commercial attractiveness. If you can offer a program with interest rates that are reasonable in the public view, the kinds of institutions that are a lot bigger and a lot more visible in local environments are going to get more excited about this. I don't know too many state banks that have tremendous infrastructure getting excited about offering loans at 80% interest rate. They're just too exposed. If they could do it at 25%, then they're likely to get into the game. Increased entrepreneurial capital to the extent profits are better, costs are reasonable. More entrepreneurs might get excited about this. Increased pressure on regulators. As more commercial players want to get involved in this, as costs come down, regulators are going to get pressured to do the right thing. We struggle so much with regulators because they're not very sure they actually really like what we do often. But if you got this looking more like a normal banking business, the high-end retail, more like the consumer finance, kind of within that sphere, it might be a whole lot more attractive. You get a lot more pressure on regulators to do the right thing. Increased demand for credit, basic, for price sensitivity on our services. Expanded outreach. If you drive costs down, isn't it a whole lot easier to reach poorer people? If you can get your average transaction cost down, it's easier to go out farther into rural areas. It's easier to get into tougher neighborhoods. Reduce your subsidy. If you've only got a finite amount of subsidy, if you've got $1 million subsidy and your costs are a lot lower, can't you spread that subsidy out over a whole lot more people? And expanded product offering. I think there are a number of products that, with our current cost structures, are simply not viable. And until you get the cost structures down, it's going to be very hard to offer those sets of financial services for which I think there's undeniable, very large demand. So costs really seem like a driver to us. Just a couple of slides on costs. The two costs I alluded to already. The dominant business model in microfinance so far is pretty expensive. You see on the left-hand side, an average of sort of 16% operating costs over assets for 466 MFIs that report to the MBB. For your average large savings bank, it's only run somewhere between 3 to 9%, sort of averages around 6%, I guess. And that's what, about a third of what our costs are for your average big state-run savings bank. And of course, for your big commercial banks are far lower. So our cost structure is simply 3 times higher than the cost structure of your basic good, well-developed savings bank. And we're low volume. Very few of our programs have achieved any real scale. Here's a nice chart that Rich Rosenberg put together. Just sort of saying 9% of FIs serve 75% of our borrowers. Still to this day, most organizations that do microfinance are really quite small. And so we haven't really solved the scale problem in any sort of systematic way across the industry, which means then if you're at these sort of small scales, you're just building very, very large numbers of organizations to get this kind of demand met. And there's just a lot of energy, a lot of friction that gets built, that gets lost in building so many things to kind of accomplish this purpose. So it's a high-cost, low-volume sort of enterprise. And still, 20 years into it, or 30, or whatever, again, wherever your starting point is, there are hundreds of millions of people who are not being served. And the other side of the equation, I don't think you can really sort this out, but it's not as bad as some of the others. It's transaction costs for clients. We really just don't talk very much about that. But our approaches are not very low in transaction costs for clients. In fact, clients spend quite a bit of time getting services from us. They sit in groups. It takes them an hour to get somewhere.